Hello from the Dukascopy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak from the Management Joint Trust with their product fingraphs.com. Jean-Francois, welcome to the studio.
Hi, Daniel.
So the dollar has corrected down and the euro accordingly has corrected up. So what is the rationale behind this?
Okay, well, it was a bit of a surprise, and we think the longer-term trends are still in place. What is going to be interesting is to watch the incidence of this correction up of the euro, down of the dollar, as we have seen equity markets consolidating quite aggressively, especially on Friday. So we're here back on our fingraphs.com mosaic. We have an hourly mosaic to be able to see the move. The hourly gives a perspective over the next few weeks. And here we have euro dollar, cable, euro Swiss, gold, dollar Swiss, dollar yen, Brent, and the S&P future. And so we'll start with the euro. And for us, this is an investor's view with a combination of a weekly, a daily, and an hourly chart. And for now, the long-term and the medium-term weekly and daily charts are still in a downtrend. If we quickly focus on the weekly, we think that there's probably a bit more time to go, and targets could lead us down to 101 over the next few months, probably towards the end of the quarter. We're getting into some exaggeration in our risk index, which is oversold. But as with momentum oscillators, it could stay in the green for quite some time. We really need to see a reversal there to call a more substantial correction. So intermediate bounce, but still in a downtrend for now on the weekly. The daily, also still in a downtrend. We've reached our targets, but the trend is still heading lower. A bit of exhaustion here. As you can see, our small envelope is hitting against the larger envelope. That is market stress. It shows that we are in a certain level of exaggeration. Yet the risk index is still above the oversold zone, and we would still need it to go into that oversold zone and turn to create an intermediate bottom. So here also still in a downtrend, although we are quite exhausted. Now, the hourly is correcting up. It's a neutral situation. You don't have any targets here. That means that the targets are heading down and the trend indicator is heading up. So in such a neutral situation, we would favor the medium and long-term bears. But it's interesting to see how quick and strong this correction up was, and we'll now go into the incidences of it during the last week. So if we go back here, so the first incidence is really on the S&P future. We've seen markets starting to correct down on the hourly chart. Bear in mind that also here the weekly chart perspective of the next few quarters is still heading up with impulsive two targets, which we believe could lead us up from 2200 to 2400 over the next few quarters. The daily chart is also still positive, and we could make it back above 2100, possibly up to 2175 over the next month or so. But the hourly is correcting down, and you can see it held quite well during the beginning of the week, but did see quite a large incidence on Friday. This is quite interesting, as a lot of people have been arguing that the dollar strength is one of the main culprits for the underperformance of US markets versus European and other international markets. Yet we realize that a dollar correction down is actually a negative for the US markets. And we believe the explanation for that is that the strength of the dollar is keeping pressure down on commodities, on imports, and especially on Brent oil. And you can see that the Brent is actually has accelerated in its correction up last week on the back of the weakening dollar. And we believe that cheap oil has a tremendous wealth effect on consumers, and that it is one of the big reasonings behind the progression of US equity markets since the beginning of the year. So if you take that out, automatically you see equity markets correct. So on a net basis, we believe a strong dollar is actually supporting equity markets and US equity markets instead of putting a negative pressure on them. It's true that it is leading European and Japanese markets to outperform, but in a way they are a bit on steroids with everything that's happening with Abenomics and QE in Europe.
So let's have a look to the gold. So is the uptrend still in place?
Well, the uptrend is also a short-term uptrend.
Okay.
Now, if you look at this investor's view, you also have a weekly chart, a daily chart, and an hourly chart. And the weekly is still heading lower. We would still have some time to go. We're niching into the oversold zone, but the trend indicator is still down with targets between 1,200 and 1,000, so an average around 1,100. So we believe at the moment we're still under pressure. The daily is also still under pressure, targets between 1140 and 1085, although we have seen several incidences of exaggeration. At the moment we are close to re-entering the oversold zone. It is interesting to see how well it has held over the last 3 weeks. And so we are watching out quite carefully at this situation because we wouldn't want it to start reversing too early here. And the hourly at the moment is supporting that bounce. If you see, we're still in a bull. Our targets are still heading up, and the possibility to move back above 1213 to 1234. So still positive on the short term. We're still in a correction up, yet at the moment the daily and the weekly charts are still negative. So we cannot talk about a major reversal in gold at the moment.
So, and we already touched the equity markets. So European and American stocks have been also hit by the correction from the dollar and the euro. Can we have a closer look?
So if you want to have a look at European equity markets, we just change portfolios here and just go into here and go into the hourly charts. And here you have the DAX, the Swiss market and the US markets. And the correction down on the dollar did have quite a strong impact on the German DAX. True, there's the Brexit talks, etc. But that's been going on for a while and could probably go on for a while longer. So I think what we've seen here last week is the immediate impact of a weaker dollar. And it's something we believe European, Japanese and US markets cannot afford at the moment.
Jean-Francois Owczarczak from the Management Joint Trust, thank you very much for your analysis today.
Thank you, Daniel.
And thanks for your interest. Do make sure to keep clicking back on the Dukascopy TV website for recent updates and exclusive interviews. Have a great day and see you next time.